In 2019, professional sports and private equity was changed forever when Major League Baseball became the first major American professional sports league to allow institutional ownership by private equity. So is this just a vanity investment, or is there real value here? Well, I've helped 9-figure clients invest and manage their portfolio. And in this video, I'm going to break down why private equity is so interested in the professional sports asset class and how this investment structure is changing private equity investing forever. So why now? Why is the time now that private equity is so interested in professional sports, and we're hearing so much about owners and teams selling at exorbitant prices? The Lakers just sold for a record $10 billion. What makes sports franchises so unique? There's a clear trend that has been occurring for over 10 years now of viewers cutting the cord. More and more viewers are stepping away from linear cable television. This puts a premium on pro sports. Pro sports is one of the rare things that people like watching live. This increases the amount that advertisers are willing to pay through these programs because they know that they can reach a targeted audience. The best example of this is running an ad on the Super Bowl that can cost millions of dollars because Americans all at one time are watching the same program and all eyeballs are on the TV. Because of this trend of cord cutting, professional sports franchises have been getting bid higher and higher as their broadcast deal rights have gone up and up and up and up over the years. So now with the trend of cord cutting, professional sports being put in a position to take advantage of this trend, let's understand some of the business economics behind professional sports and why this business model is so powerful and one of the most unique business models that I've had the chance to analyze. So first things first, professional sports teams control a territory, a respective territory, and there's no other team allowed in that territory. So for me, I live in Arizona. The Diamondbacks, the Suns, the Arizona Cardinals control this region. This gives the team a form of a legal monopoly, and this is allowed because the government sees it more fit that all the players participate in one league. They say it's better for competition, and they say it's better for the consumer as fans. This gives owners of sports franchises a lot of leverage to call the shots. If they're the only game in town, they call the shots. Added to the business is the broadcasting rights for the local region. Along with controlling the territory, they control the broadcasting rights. Whether it's NBA, MLB, NHL, or NFL, they all have some regional broadcasting deals that allows them to strike deals and control the sports viewership in that region. There's another part of this business model that is so unique, unlike any other business model, and it's that each team has a pro rata share of the total league's revenue, and each league has a commissioner that their entire job is to promote the business and be a spokesperson for the owners. So imagine if you had a business, let's say Apple and Android got together and they said, we're going to split the total revenue between the both of us, and we're going to appoint a master CEO that their entire job is to make sure that our business and our phones are promoted to all the customers. This is essentially what sports franchises do, and this is unlike any other business where competition takes away from your market share. In the instance of sports, there is no competition. Everybody's playing the same game to promote their product. Even if you're the worst team in the league, you still get a split of the league revenue. It is estimated that last year alone, the NFL had $23 billion in collective revenue that was split between all NFL franchises. The other very interesting part about sports franchises is that the league limits the amount of debt that the teams are allowed to take on. From an investment perspective, this is great. If the league limits the amount of debt that teams can take on, that means that these businesses will never be over leveraged or have the possibility of facing bankruptcy. This leads to exactly why professional sports teams have allowed outside ownership, because this is a path for them to raise capital. In any other business model, this is smiled at, but for some reason in professional sports, it's been frowned upon. When companies go public or raise rounds in venture, they're looking for outside investors and money to grow and expand their business. Before, sports teams were not allowed to do this because there was a limited ownership and a limited amount of debt they could take on. This put a lot of burden on the owners when they were trying to either build new stadiums or expand the franchise in other areas. Well, this has since changed, and now that the sports teams are allowed to sell off minority stakes, they have access to get capital to continue these projects. The Buffalo Bills are building a new stadium because they've partnered with Arctos Sports, who's been a liquidity provider for the team to raise capital. So overall, is this just a money grab in another way for private equity to sell you something, or is there real value here? The first question that usually pops up from investors is, how far can this go? How high can a team be valued? The Lakers just sold for $10 billion. Well, in this case of professional sports, the seller really sets the market, because there's been less than 4 new professional sports teams that have been created since the year 2000. And if you really think about it, if you want to enter this market of professional sports, there's huge barriers to entries. You cannot just go to a city and start a new franchise, and starting a new league, especially when the best competition play in the 4 major professional sports leagues, it's a real uphill battle. So the leagues and the owners hold a tremendous amount of power. So with that, they tend to set the market and the price, because if you want to be an owner of a sports team, there's only really one place that you can go, and you have to accept what's being offered. Now, with that being said, these teams are looking for this capital to, again, grow and expand their franchise like we spoke about earlier. The other side that doesn't get thought about, though, is that a lot of the owners up to this point have been mom and pop owners, and that has began to shift to more institutional ownership. A lot of these owners do want to retain some form of ownership in their franchise, but they're also looking for liquidity. Imagine if you own the rarest diamond in the world and you had this on your mantle, and it's a beautiful diamond worth billions of dollars, but in the end, it sits there and there's nothing that you can do for it. This is equivalent to owning a sports team, which generates sales from tickets and other revenue streams, but the overall equity and value cannot be unlocked unless you sold the franchise. In the past, this was not possible with limited ownership, but now that owners can sell off a percentage of the franchise and still maintain ownership, these owners now have a path towards liquidity. So now that we've discussed the business model, why professional sports owners are doing this, you as a retail investor watching this right now, you may be wondering, this is great for private equity firms worth billions of dollars and ultra billionaires that own the teams, but how does this affect the retail investor? Well, retail investors that are accredited are allowed to invest in the pro sports teams with the private equity funds. To get access to this, you need to talk to a financial advisor that's qualified in alternative investments and understands how to get you placed in the investment and if you're a good fit for ownership in professional sports. Of course, on this channel, we're always talking about alternative investments, different ways to approach our portfolio. This is never investment advice. So again, make sure you talk to a financial advisor and see if you're qualified, see if it's a good fit for your portfolio. So now that you've been introduced to professional sports as an asset class, if you're interested in learning more about alternative investments, make sure you click the video above to the Best Beginner's Guide to Alternative Investments.